Hey, welcome to this week's video. 'Tis the season to be buying gifts and preparing for the holiday, but did you know that your business would also like a gift? Well, the answer is yes, and in this video, we'll help you with that shopping list for that difficult to buy business that you own. Specifically, what your business would like is to save money on taxes. So, in this video, we'll talk about 6 powerful business tax strategies you can easily implement before the end of 2022. So, let's get to work. So, the first is to prepay expenses. IRS regulations contain what's called a safe harbor that allows cash basis taxpayers to prepay and deduct qualifying expenses up to 12 months in advance without challenge or adjustment by the IRS. You can prepay only 12 months of qualifying expenses under the safe harbor rule. You must be a cash basis taxpayer, which means you record income and deduct expenses based on when expenses are paid and when cash is actually received. Qualifying expenses include like lease payments, business vehicles, rent payments on offices, machinery, and insurance. So, if, for example, you pay $3,000 a month in rent and you would like to make a $36,000 deduction this year, so on Friday, December 31st, you mail a check for $36,000 to cover all of your 2023 rent. Your landlord does not receive the payment in the mail until Tuesday, January 4th, 2023. Here are the results. You deduct $36,000 in 2022, the year you paid the money. The landlord reports taxable income of $36,000 in 2023, the year he received the money. You get the deduction this year, and the landlord gets the income in next year. So the landlord gets what they want, which is the entire rent in advance, eliminating any collection problems and keeping the rent taxable in the year that they expect it to be taxable. Okay, so the second one is stop billing customers. This is a rock solid, easy strategy to reduce your taxable income for this year. Stop billing your customers, your clients, your patients until after December 31st, 2022. Customers, clients, patients, and insurance companies generally don't pay until billed. Not billing customers and patients is a time tested tax strategy that business owners have used successfully for many years. So, for example, Jim, a dentist, usually bills his patients and insurance companies at the end of each week. This year, however, he sends no bills in December. Instead, he gathers up those bills and mails them the first week of January. He just postponed paying taxes on his December 22 income by moving it to 2023. So the next one is to buy office equipment. Currently with bonus depreciation at 100%, along with increased limits for Section 179 expensing, buy your equipment or machinery and place it in service before December 31st and get a deduction for 100% possibly of the cost in 2022. Qualifying bonus depreciation and what they call Section 179 purchases for full expensing include things like machinery, equipment, computers, desks, chairs, and furniture, and possibly even vehicles, which I did another video on and I'll link in the description. But caution though, 100% bonus depreciation is set to go down to 80% starting in 2023. However, who knows, maybe Congress will extend this, so stay tuned. Okay, here's a good one. Use your credit cards. So, if you're a single member LLC or a sole proprietor filing Schedule C for your business, which means you'd file it with your personal return, the day you charge a purchase to your business or card is the day you deduct that expense. Therefore, as Schedule C taxpayer, you should consider using your credit card for last minute purchases of office supplies and other business necessities instead of cash. If you operate your business as a corporation, and if the corporation has a credit card in the corporate name, the same rule applies. But if you operate your business as a corporation and you are the personal owner of the credit card, the corporation must reimburse you if you want the corporation to realize the tax deduction, and that happens on the date of reimbursement. Thus, submit your expense report and have your corporation make its reimbursements to you before midnight on December 31. Okay, here's one that I get questioned on all the time. Don't assume too many deductions. If your business deductions exceed your business income, you have a tax loss for the year, right? With a few modifications to the loss, the tax law calls this a net operating loss or NOL. If you are just starting your business, you could very possibly have an NOL. You could have a loss for the year with an ongoing successful business. So you used to be able to carry back this NOL 2 years and get immediate tax refunds from previous year's tax paid, but the Tax Cuts and Jobs Act eliminated this provision. Now you can only carry your NOL forward and it can only offset up to 80% of your taxable income in any future year. Still not a bad deal though. But what does this mean? You should never stop documenting your deductions and you should always claim all your rightful deductions. Okay, so number 6, in the CARES Act, Congress finally fixed the qualifying improvement property, or sometimes it's referred to as QIP. It's an error that it made when enacting the Tax Cuts and Jobs Act. QUIP is an improvement made by you to the interior portion of a building you own that is non residential real property. Think office buildings, retail stores, and shopping centers. If you place the improvement in service after the date you place the building in service. The big deal with QUIP is that it's not considered real property that you depreciate over 39 years. QUIP is 15-year property eligible for immediate deduction either using the 100% bonus depreciation or Section 179 depreciation. To get this QUIP deduction in 2022, you need to place the QUIP in service on or before the end of the year. So, to summarize some key takeaways that you can save money on before the end of the year, prepay your expenses. Stop billing until next year. Take advantage of the depreciation rules. Use your credit card, as I mentioned, to pay for expenses if you don't want to use cash. And don't be shy to make sure that you take all legitimate expenses and consider everything that you need for your business in the next year. And don't be shy to deduct legitimate expenses and take a look at the qualified improvement property and how that may benefit your business. Well, that's it for this week's video. If you got any value out of the video, hit that thumbs up as it really helps me out. And if you're not a subscriber, I'd love to have you as a subscriber. Until next time, I'll catch you on the next one.